In a world ravaged by inflation, one hidden oasis remains untouched. Join me on a journey to a land where prices hold steady and inflation is a distant memory. Amidst the turmoil, a remarkable country emerges unscathed. Witness the enigma of a place where inflation has vanished for over a decade. Uncover the secret, embrace the resilience. Prepare for an extraordinary tale of wonder and stability. Together, we will explore a realm defying the inflation crisis. While other nations face soaring inflation rates that leave your wallet weeping, Switzerland stands tall like a UFO among a field of cows. While inflation runs rampant elsewhere, Switzerland keeps its cool with price increases up to 5 times lower. It's like they have a force field protecting them from the inflation monster. But hold on a second, skeptics may interject. Wait, didn't Switzerland have 1.6% inflation in 2021? That's merely a blip on the radar, my friend. Brace yourself for this mind-blowing revelation. A whopping 70% of the years since 2009 have seen Switzerland experience negative inflation. Yes, you heard it right. Prices falling year after year. And even when they do have positive inflation, it never exceeds a measly 1%. It's as if they possess some sort of a magical spell that keeps inflation at bay. Now, here's where the plot thickens. While the rest of the world cautiously considers firing up their money printing presses, Switzerland boldly declares, "Hold my Swiss chocolate." Not only does this central bank print money, but it does so at an astonishing rate. In the past decade alone, the Swiss central bank has increased the volume of francs in circulation by 4 times. It's like they have a turbocharged money-making machine, leaving other central banks in their dust. In fact, they outshine the European Central Bank's money printing game by a whopping 60%. So, what's their unique advantage? How does Switzerland manage to keep inflation at bay despite printing money like there's no tomorrow? Could it be their impeccably crafted watches, ensuring perfect timing? Or perhaps their low taxes, leaving more money in the pockets of Swiss citizens? But before we venture down the Swiss rabbit hole, let's take a moment to demystify the workings of a central bank. Imagine a bank on steroids but with superpowers. Central banks create money out of thin air, regulate interest rates, and keep a watchful eye on inflation. They're like financial superheroes, battling the forces of economic chaos. And here's a fun tidbit. Central banks can actually turn a profit. In 2020, the European Central Bank raked in a cool 1.6 billion euros in net profit. But Switzerland takes it to another level. Their central bank not only turns a profit, but is even listed on the stock exchange. It's like investing in money itself. Well, almost. So, if you've ever dreamt of owning a piece of a central bank, Switzerland is the place to be. Just don't expect those dividends to fund your retirement. Now, let's get down to business. Loans and investments are a central bank's bread and butter. They lend money to governments and banks, and these loans come with interest. Cha-ching! But here's the kicker. The money they lend is freshly minted, brand spanking new money. So, when you hold cash in your hand, you can trace its origins back to a loan from the central bank to your government or a bank. It's like a never-ending circle of money creation and repayment. But hold on, I hear your thoughts raising. If central banks keep printing money, won't that lead to inflation? That's where the Swiss throw a curveball. Their example shows that money printing doesn't always result in inflation. It's as if they hold a secret recipe for keeping prices in check, while the rest of the world struggles with rising costs. But wait, my curious viewers, there's more to this tale. How does all this tie into the absence of inflation in Switzerland? Brace yourselves, for I'm about to reveal the most captivating secret. Imagine a table where we meticulously record the accounting movements of the European Central Bank. On one side, we note the mind-boggling sum of 8.3 trillion euros representing the total money created in the European economy. Impressive, right? But here comes the twist. On the other side, we jot down the recipients of all that money. Eurozone governments have borrowed a staggering 4.7 trillion euros, while commercial banks have received a generous 2.2 trillion euros. But hold your horses, keen-eyed viewers. You may have noticed something peculiar. Even after summing up all the loans to banks and governments, there's still a missing 1.4 trillion euros. Where on earth did that money disappear to? Let me enlighten you. Central banks possess a secret weapon, a sneaky third way to inject the money they print into the economy, a method we haven't discussed yet. It involves purchasing assets like stocks, gold, or foreign currencies. Let's call it the central bank's piggy bank. These assets, known as reserves, play a vital role in taming inflation and stabilizing exchange rates. Having substantial reserves, such as gold, gives a central bank the power to sell them off in the face of unexpected inflation or plummeting exchange rates. By trading gold for their own currency, the central bank can reduce the money supply, halting the currency's depreciation. It's akin to a superhero swooping in to save the day, rescuing the currency from a downward spiral. In simpler terms, significant reserves provide a crucial guarantee that the central bank can control the supply and demand of its currency, ensuring its value remains stable and secure. Now, let's crunch some numbers. The European Central Bank's reserves amount to approximately 1.4 trillion euros, backing the Eurozone's currency at around 17%. But hold onto your seats because the Swiss Central Bank takes it to a whole new level. Prepare to be amazed. The Swiss Central Bank boasts a staggering reserve backing of 91.5%. That's right, over 9 out of 10 Swiss francs are backed by gold. Shares of renowned companies like Amazon, Google, Apple, or assets from foreign countries. It's like they're playing a real-life game of Monopoly with the most valuable properties. If these reserves were divided among the Swiss citizens themselves, each lucky individual would receive over $114,000. Talk about striking gold! Now, let's compare this prudent policy with central banks that simply hand over money to governments, allowing them to indulge in day-to-day expenses. Yes, you guessed it, that's precisely what the ECB and the Fed have been up for quite some time. It's like giving your credit card to a shopaholic friend and hoping for the best. Spoiler alert, it rarely ends well. First, picture the Swiss government as the largest shareholder of the central bank, reaping the mind-boggling benefit of practically free financing year after year. It's like they've stumbled upon a treasure chest of free money, making every other government jealous. But that's not all. The second superpower lies in the Swiss franc itself, the currency with unrivaled backing, security, and stability. It's a shield against economic crisis and inflation, providing the ultimate protection for savers worldwide. Think of it as a golden fortress for your wealth. This newfound status as an investment commodity has propelled the Swiss franc to stratospheric heights. Its value has skyrocketed, almost doubling in just 2 decades. It's like the Swiss franc has been perfecting its moonwalking straight to the top. Here's the real kicker. The more investors clamor to buy Swiss francs, the higher its price soars. And the higher it goes, the easier it becomes for the central bank to buy more reserves and attract even more investors. It's a never-ending cycle of monetary success. But wait, there's more! The Swiss Central Bank can keep printing francs, exchanging them for foreign currencies, and then converting them into a plethora of valuable assets, mostly shares. And the cherry on top, no inflation. It's like the Swiss franc is a superhero, flying high and defying the laws of inflation. Now, on to the secret ingredient in Switzerland's financial recipe: taxes. While the country may have been known as a tax haven, recent changes have diminished its reputation. But fear not, for taxes in Switzerland are still remarkably low compared to other countries. It's like stumbling upon the ultimate tax haven treasure chest. And what do low taxes have to do with inflation, you ask? Well, the enticing tax environment in Switzerland attracts companies from around the globe, itching to invest in this haven. It's not just about saving money, it's about attracting top-notch talent and creating incredible opportunities. The Swiss economy is a magnet for the world's best and brightest. And there you have it, my curious companions. Switzerland's financial prowess and the captivating world of the Swiss francs have been revealed. And before we part ways, don't forget to show some love. If you enjoyed this exploration in the fascinating world of finance, be sure to hit that like button and subscribe to stay tuned for more engaging content. Your support means the world to us. Until next time, stay curious and keep learning.